What's up, everyone? Welcome back to the Trading World. Today is October 14th, 2025. Today was a Tuesday, and I'm going to be reviewing price action in detail in the NASDAQ futures market. If you guys like this type of content, definitely consider leaving a like, subscribing, following me on X, and checking out my completely free Discord. The link to that is in my bio. So let's go ahead and talk about price action. Let's jump right into it. So today, going into market open, this was market open right here. We had this liquidity curve, and as we've talked about before, these curves, as they're being made, they're going to be high resistance, meaning every time we push up into it, we reject it. But then eventually, when the market is ready to go, it's going to be low resistance, and that's what you can see occurring right here. When we actually start to break through this curve, this is a giant stop run. And so this all ties back to understanding and making sure you understand when the market is high resistant and when the market is low resistant, and use that to your advantage. Here, all through here, this is high resistant, pushing up into this curve. And then market open, boom, tap it one last time, and we form the Judas swing, which, if you guys don't know, Judas swing is the manipulation leg before expansion that occurs right after market opens. So it's a fake out move that occurs right after the market opens. Here's where the market opens, right at 9:30, and you can see here's that Judas swing where it's that fake out move before the real move. The trade of the day, in my opinion, was after we ended up getting this fake out swing here, we still had this liquidity curve. So at this point, we're anticipating it to eventually be low resistance. And what happens is we pop below the low and then get an amazing close inversing this gap right here. In my opinion, this is a very, very obvious inversion, especially because when we inverse the gap, we actually inverse it while also closing above an old down close candle. This signature Doji, you guys know Doji probably if you watch my videos. He talks about this a lot, where when you inverse a fair value gap with momentum and you close above an order block at the same time, this is going to be amazing signature and an even better inversion for value gap. So we inverse this series of gaps here and also create an order block. Boom. You might be thinking, what about this external gap? Conceptualize this, right? These highs are going to be low resistance when we get up to them. So because this is going into the 950 to 1010 macro, treat this as a void, right? This is likely not going to matter because, wow, this is such a big obvious liquidity pool up here. There's going to be a lot of stop losses above here. So this void is not going to matter when we get this sweep of this low and then close higher. This void is essentially, it's as if it's not there. It's not going to be like an external gap. It's going to be more like a void. And then when we inverse this, boom, we run up, take out all these low resistance highs, and actually we perfectly ended up filling the overnight gap. Check this out, right? So as I always say, the overnight gap is an amazing draw on liquidity, and you can drag this out from here to here. By the way, if you guys don't remember, you go to the bottom right of your screen, switch this from ETH to RTH right there, and it's going to basically, it's going to switch your chart so you can actually see where the gap is, and then drag this over, and this is going to be an amazing draw on liquidity. And you can see that inversion for value gap as an entry actually served as an amazing entry for the entire day. If you held this all the way up, that'd be 8R. I'm not suggesting you do that, but this inversion for value gap was the trade of the day. You could definitely hold it to the end of these low resistance highs. Now, as far as market open goes, market open was kind of tricky because at the time, you might not know if this is going to be high resistant or low resistant at market open, right here, every time we push up into it, it's high resistant. Market open, you might think it's turning low resistant, but it actually doesn't. And check this out. This is a couple things I want to talk about. So you guys may have heard me talk about true opens in prior videos. I'm not quite sure if I've talked about them a whole lot, but they're actually going to be super valuable to identify the manipulation. So you can actually see, I'm going to pull this up here, but you can actually see when let's see here. Where is it? You can actually see right here that this final purge up at right before market open, we induced this high perfectly into that liquidity curve, right? We induced that high like perfectly in line with that liquidity curve, and pay attention to all of our true opens. 730 is the true open. Once again, if you guys don't know what a true open is, it is the open of the second quarter of any of a range of time in quarterly theory. So the open of a 6-hour cycle, the open of a 90-minute cycle, etc. And so we perfectly induce the high into this high resistant curve here, and basically this is the start of that Judas swing. A cool fancy trade, I'm not suggesting you should take this, but a fancy trade that's very advanced that you could theoretically take here is we had a 1-minute propulsion block and then 15-second change in state. Bang! Above all the true opens, we hit that change in state right down. Not saying that, suggesting you should take that. As I said, the more realistic trade was that 1-minute inversion for value gap. And then you can see as well, it ended up becoming a 15-minute inversion for value gap. And you might be wondering, well, how would you have known that this was going to be when we were going to go around liquidity? Well, we actually had this 4-hour gap below that we had already used once prior to this over here. Then we used it a second time. Then we used it a third time. So we reclaimed this fair value gap 2 other times. So 1, you get off the screen here. 2, 3. So anytime we use a fair value gap 3 times, I add a little lightning bolt here, basically saying, yo, this gap is super powerful. We've used it 1, 2, 3 times. We inverse the gap. Inverse this 15-minute fair value gap right here, coming off of the 4-hour gap, and this is going to be very, very nice. A nice inversion because we're delivering from a gap that's been reclaimed 1, 2, 3 times. So if you guys know what a reclaimed gap is, it's when you use a gap, the same gap more than once. And then you can see we run through all these highs. You could take this as a Jan entry, meaning you could wait for a little bit of a retrace, tapping the inversion for value gap right here, and then you could enter here with even better risk reward, and then we go up to those low resistance highs. Then let's see here. What else should we look at? And then I think finally I'll end it off with this. Beautiful. Once we got that 10 a.m. reversal, we ended up getting an amazing displacement candle that created a gap right here. And you can see this gap was pretty nicely held. And you could expect it to be held because on the 15-minute, this is a liquidity sweep, break of structure for value gap. So what is that? You guys might not know what I'm talking about. That's the 2022 model. That's TGR's model. If you don't know what that is, go watch the video I made on that. But liquidity sweep, break of structure for value gap on the 15-minute, and it comes with a very nice displacement candle. So we can expect this 15-minute fair value gap to be likely to hold. So we drag this fair value gap out on the 15-minute. And then we could drop down to a 1-minute, which is the aligned time frame with a 15-minute. And then you can see 1 minute change in state of delivery occurs right here. And as you guys may or may not know from my other videos, you can measure out the manipulation leg from from the low to the change of state. And OTE, I call this my sniper model. It's going to be very, very sensitive. And look at how precisely we react off of that. Just beautiful. Just absolutely beautiful. And the craziest part about this is pair this with the true open of this cycle on the 90-minute cycle. Pair it with the true open. Check this out. What's the true open of this cycle? So this is from 10 of this 90-minute cycle. The true open so this is 10:30 to 12. That's the 90-minute cycle. The true open is 10:52. Check that out. The sniper model entry is perfectly below 10:52. Just absolutely beautiful. Absolutely beautiful. Is that a coincidence? No. No. Smart money. There's a reason this sniper model ended up holding, and it's because is perfectly right below 10:52. So once again, if you don't understand, the normal flow state model is you basically enter on a change of state delivery retest after using a 15-minute for value gap. So we hold the 15-minute for value gap, we get a sweep. So liquidity sweep into the 15-minute for value gap, change in state of delivery. So flow state model is liquidity sweep, and then change state of delivery, and then we use a higher time frame key level. So 15-minute, if we have a 15-minute key level for flow state, we use a 1 minute change in state of delivery, like right here. But as you guys know, as I like to tell you guys, you can, anytime it's a very wide change in state of delivery like this, like you can tell we're probably going to dig into it. You can actually mark out OTE, and this is going to be very sensitive. And I call this the sniper model. It's like within the flow state model, but it's just a sniper entry within the flow state model. Measure out OTE of the manipulation leg from the change of state to the low, and then that's the sniper entry. And then you can see we end up going to where our max extension, 4 standard deviations up, and actually right in between 4 and 5 standard deviations up, and that's essentially where you'll see these market maker models peak. So alright guys, that's where I'm going to leave it for today. Just thought I'd make a video for today because I want to get more consistent with it. I really do. And with that, hopefully you guys enjoyed this video. I'll see you guys in the next one. Peace out.